Good day, everyone. This is Seetified, the clinical psychologist at the Bird Nest. I hope everyone is well. Today, we're going to discuss a topic on the psychology of shorting. This is a topic that's not really discussed very often, and I would like to touch on this today. So, basically, in a nutshell, shorting is when a trader wants to sell the asset at a high price in the hope that its price will go down and buying it back later for a profit. But however, in order to short sell the asset, the trader must first borrow it from someone who owns it. So therefore, the trader will need to pay a fee in order to borrow the asset. But short selling can be brutally difficult, especially during since we just had a really nice run up by Bitcoin not too long ago. And for those who probably only joined crypto recently, you might only be used to the perspective of going long, and going short might be rather foreign to you. Moreover, shorts are almost always in the minority and can be quite lonely as you are going against the grain. They can somehow psychologically mess with how you think about and how you approach shorting in general. Then this is why many traders do not like to short assets or are unfamiliar with shorting, which is unsurprising but also very understandable. Therefore, especially like I mentioned earlier, that those who are only used to going long and are only familiar with the up only term, with a nice run up with Bitcoin, are perhaps more comfortable with buying only during strong uptrends, as this is what you may be familiar with. And it's also less risky, perhaps, compared to shorting, where there may be unlimited risk when you are shorting an asset. But it's important to think the other way around as well. The trend could be your friend, even though when it's going down. Short selling in the downtrend market is riding the trend, and no one should be afraid of it. And it's something that we should embrace it and go with the market and go with the flow of how things are going on with the market currently. You need to know that market prices can go up, it can go down, and no market goes up or down in a straight line. And remember that the market is driven by human emotions. Just as we saw a few months ago that the rally Bitcoin had, this was driven by greed. Likewise, on the flip side, panic will lead to sell-offs, and this is something that we as traders need to view as opportunities if you would like to make money in this market, just like when we go long on a trade. And it's therefore so important to have this trait of cognitive flexibility. Well, success as a flexible trader combines both a willingness to be flexible and adapt to a given situation in being flexible. In other words, being prepared to change your thinking or believing that you can change it and that the results of doing so can really improve your situation. So here are some tips that could help you navigate going approach shorting. For example, have a plan similar to how you would do when you have a long position. And think about position size, stop loss, and risk management. And instead of, getting into a position at the lower price, think of, getting in on the short when there's a bearish retest of important resistance areas. In other words, get into a trade on a green candle. Perhaps for some, it may help if you invert the chart to help you visualize things better if you're used to going long most of the time. And it's important to note that you should start small to build your confidence and not go all in. And having the mindset of a short seller is very valuable. It can help you develop also healthy skepticism of the market in general, making you perhaps more picky and careful as well with your trades. I hope this was helpful for you guys. Give a thumbs up for the video if you enjoy the content and like the Bird Nest YouTube channel if you want to stay updated for daily new videos. Have a great day, everyone. Take care.